Bitcoin bulls, you are in danger with the Bitcoin price action because we have just confirmed on the 4-hourly time frame a triple top pattern and we're breaking below its neckline. Should we be concerned of a continued dump into the low 70s where the support line of the bigger time frame bear flag exists? That's what I want to talk to you about. The semi chart is only going to produce gaps for another 2 weeks. So in these 2 weeks, before we pivot into 24/7 trading in the Chicago Mercantile Exchange, will Bitcoin close the gap to the upside and then vomit down to 67 to close the immediate gaps to the downside? Well, that's also something that I want to comment on in today's video since I'm known as the Bitcoin semi gap kid. I want to go over the Bitcoin long term. I said that 2027 is going to be a bad year for markets. Why did I say that? It's due to this particular chart, which you all know. I don't know if you love it, but I think you all know about it. The S&P 500 has been going parabolically upwards. When is that rally finishing? And if the rally is over, how is that going to impact BTC and cryptocurrencies? We'll go into bonds, we'll go into Stretch and Michael Saylor, President Trump's China visit, and we'll end off with Powell and his term coming to an end as Fed chair. Guys and girls, if those topics sound interesting to you, do me a favor and destroy the like button. You've been doing a fantastic job in the videos we've posted over the past week. If you can leave a like, that would mean the world to me. And check out this video here, an interview that I conducted with Raoul Powell, if you want to know Raoul Powell's Bitcoin prediction for 2026 and his top 4 altcoins that he's buying into. With that said, let's begin with BTC on the short term, and then we'll go into the long term. I posted a tweet saying that Bitcoin is breaking down from a triple top on the 4-hourly. This is not good. Roughly about 20 hours ago, I live streamed on the Moonshow channel, and I highlighted that this triple top is forming. And if we break below its neckline, which we are in the process of doing so, then I anticipate Bitcoin falling all the way to the support line of the bear flag. And if we reach that support line, then in the meantime, if we do that, then I think that Bitcoin would eventually go and sweep the lows created in February, which would align with 2018 because we would end up sweeping the low of Feb in June, go lower, find our lowest point in Q4, and then start going back to the upside. Why did I say that? Well, if we begin with the short-term time frame, triple tops are known to be, trend reversing patterns. Obviously, because today is a Saturday and tomorrow is a Sunday, I want to give an exception for this triple top. I'm not going to say this is confirmed until Monday and we hit market open. And if Bitcoin is still below this neckline of $78,700, if Bitcoin is below this neckline on Monday market open, then I will go into a short position. And if you want to prepare to open a position, you can check out the links in the description down below for this video to sign up to Weeks, BTCC, Bybits to get the best bonuses available. We have roughly another 24 to 36 hours until Monday market open. And if Bitcoin is below this neckline, then I will enter into a short position. I didn't go into a short with a double top because Bitcoin decided to do one more move to the upside, collect the liquidity, and now it's down again. So I want that confirmation with Monday market open. If that is the case, then I will comfortably enter into a short. Well, why? Why is CryptoKid doing that? Because Bitcoin is below the 200 daily moving average. It's getting rejected from the 200 daily, and we're copying the price movements from 2018. And I showed you this price comparison. I'll go over the fractal one more time. You can see that in 2022 March, Bitcoin rallies with a bear flag, and following that retest, it sees a plummeting of 67%. I'm not saying that's going to happen, but I just would be cautious with leverage trades, or I am at least being cautious myself with leverage trades. In 2018, Bitcoin sees a huge capitulation from its peak in December of 2017. That capitulation leads to a low generated in February of 2018. 2018 is a midterm year. Bitcoin rallies from that low to create a higher low. That higher low brings you to the 200 daily moving average, and boom. In June of the midterm year, Bitcoin sweeps the low from February, and eventually in Q4, you identify the lowest point in the cycle to then reverse into a bullish trend. Bitcoin is so far copying that. We see a low in February, we're retesting the 200 daily moving average, which in both cycles caused a rejection at this point in the 4-year cycles. And that rejection eventually led to a sweep of the low, which you created earlier in that year. If I go and compare the price to 2022's bear market, it's a little bit different because the difference is the low wasn't created in February, it was created in January of the midterm year. And it's honestly not too big of a time discrepancy to invalidate it. It's only off by literally one single week. So I wouldn't invalidate it so much. The price of Bitcoin created a new all-time high in the last bull cycle. Now it's become the last bull cycle. It's sad to say it. But we did the all-time high a month before the halving because of the ETFs. So I think you can play around with 1 month of time discrepancy. So this January low would technically be a February low. So for me, it makes sense, right? You saw that low. You created a higher low, which led to a retest of the 200 daily moving average. You saw a double top, or at least a toppy pattern, and that led into a significant move down. So as a levered trader, I'm being more cautious than being bullish. As an investor, I think this is the best possible area to accumulate Bitcoin because I think Bitcoin is going to reach millions of dollars in the future. So as an investor, I'm buying at 78. I'm going to buy if we invalidate this and we break above the 200 daily moving average and do something different to what we've done previously. I'm completely okay with that because I already have a bunch of Bitcoin, and Bitcoin going up makes me richer. So I would be happy with that. But if Bitcoin goes lower, because I know that Bitcoin will at some point see a reversal upwards, I'm fine with buying the dip. So an investor, I can't be happier. But as a leverage trader, for me, it's better to be cautious and reevaluate and jump in when it's the right moment. There's no need to rush things from my personal perspective. Why do I think 2027 will be bad? Well, actually, there's 2 reasons. Reason number 1, if you don't know about this chart, this was a chart created in the 1800s by a farmer whose name goes by Samuel Benner. He made this chart based off of the harvesting cycles of his crops. And his argument is that every time harvest seasons and harvest cycles come to an end, you see the beginning of a different market and a market shift. And we've had these market shifts. We've seen super cycles or super bull cycles and then super corrections. And then in the intervals, you've seen market appreciations and market downturns, but it wasn't at the impact of market super cycles. In 2026, we should be seeing not a super cycle, but a market high. And the S&P and Bitcoin, well, specifically the S&P 500, so far in 2026 has been doing quite well. But 2026 should be the peak, according to Samuel Benner, who was right roughly 90% of the time with his market expectations. He was wrong for a few, including the 2019-2020 price era, but that price action was caused by the pandemic, so he couldn't have predicted that in the past. So when you get rid of black swan events, it's closer to 95% accuracy with his predictions from 1800s, and it's remarkable that we're still following it. And if something is followed and not broken, for me, as a probabilistic trader, it doesn't make sense to assume something else will happen. Why should I not follow a system that works until it's broken? So I like to play along with the 4-year cycles. I like to play along with Samuel Benner's harvest cycles. And they all point to the picture that 2026 is going to be the top for traditional markets, and that Bitcoin will find its low towards the end of this year. And that in 2027, for Bitcoin specifically, we should be slowly starting to make a move to the upside, but it's not going to be the point of an all-time high that's derived for that bull cycle. So for traditional markets, there is a divergence. Bitcoin and the S&P are creating a divergence with each other. This divergence was seen in 2018 when Bitcoin had its high and then ended up seeing a decline, but the S&P moved higher. That divergence resulted in both of them dropping in Q4 of the midterm year, which we're in currently. We know that Bitcoin always tops out first, then the S&P follows. Bitcoin tops out first, then the S&P follows. For 2026, 2025, Bitcoin did top out first. The S&P did crash afterward. But just like 2018, which is a period of the market where we're very similar to with Bitcoin's price action specifically, we're getting that divergence. And I think in Q4, the S&P will go down, And I think in Q4, Bitcoin will also go down, mark their lows. And in 2027, I think Bitcoin will do a little bit better than the S&P 500. It's just that I'm concerned about the Treasuries. I'm concerned about the bond market. Okay, the S&P has hit its 18th all-time high in 2026. But when I take a look at bonds, which you will see from Marty Bent's post, he highlights the US 10-year climbing to 4.47%. It's higher. It's even higher than 4.47% now. The US 30-year is above 5%. Japanese bonds are hitting levels that we've never seen before. And American treasuries are at levels that we experienced pre-2008 financial crisis. The fact that Treasury yields are up so much shows the distrust of people in the American economy, shows the uncertainty that's there from the Iran conflict. If people are removing money from the American market, which pushes premiums on the yield so that investors are attracted once again, it shows something being broken. And something is broken. The Fed is not expected to cut rates until the end of 2027, and there's a 30% chance they hike rates in 2026. So you're not operating in the traditional Keynesian model of boom and then bust cycles. That's fully controlled and puppeteered by the interest rates. Interest rates are very low for a period of time. People borrow money, and through that borrowed money, cheap borrowed money, they invest it into markets, and that creates an inflation. And to manage that inflation, the Fed increases interest rates until inflation cools down. Once it does, they cut the rates and the cycle repeats. For the first time, basically, I think the last time we got high interest rates for a prolonged period was 1996 to the dot-com bubble. You guys saw what happened. We had the dot-com bubble. It was a huge, huge, huge crash. When you look at money supply in 2026 compared to money supply relative to the S&P in the dot-com bubble, the levels are the same. So there's so many warning signals which tell me that 2027 can be a bad year. And I think being cautious, just like Warren Buffett, the biggest investor of all time, keeping more cash and dollar cost averaging in assets that I believe are already in a discount, like Bitcoin, is the strategy which makes the most amount of sense. And that's what I will continue to do from a personal investing angle. We got 3 more topics to go through, guys. We have STRC, we have China, and then we have Powell. When we look at Stretch and Michael Saylor in general, he was able to repurchase $1.5 billion of debt that was due in 2029 convertible notes, 0% interest convertible notes. He paid off this $1.5 billion using common A stock sales of MSTR and from the recent upward demand of STRC, Stretch, his preferred equity product. I think it's smart that he's reducing his debt. By reducing his debt, he is able to keep the credit risk rating high, or like at not severe areas, so that investors still are attracted to purchase MSTR. And if MSTR sees good volume, and if STRC sees good volume, he's able to buy more Bitcoin. I think the model is smart, and I think it will work in the long term. I just wouldn't be falling for the propaganda that STRC is seeing a record day in volume, and that yesterday STRC was able to acquire enough capital that can purchase 14,000 Bitcoin, and that is 30 times the amount of new Bitcoin which was issued into the supply. Because what people forget is, until about this week, Friday was dividend day. Friday was when the monthly dividend is distributed. Until about this week, for the past 3 weeks before us, STRC saw 0 amounts of Bitcoin buying pressure. It's only when we enter into the week of dividends, like you can see repeatedly every month when we go into dividend time, people buy in just to capitalize on the dividend that's going to be paid in the short term. But as soon as the dividend is paid, which is on Friday, you can see that the buying pressure stops and STRC goes away from its parity at $100. That is the concept which is miscalculated with STRC. They're trying to fix that by offering semi-monthly dividends to maintain constant buying pressure, which will hopefully in turn create constant buying pressure for Bitcoin. Let's see what happens with that. My preferred equity is actually not STRC, but it is SATA. SATA works in almost the identical formats as STRC. The issuer is different. So STRC is issued by Strategy, which have a lot more Bitcoin than the issuer of SATA, that is Strive. But Strive have 13,000 Bitcoin, but unlike Strategy, they have zero debt. And SATA gives people dividends daily instead of STRC's monthly payout. So STRC pays 11.6% per annum divided by 12. SATA pays 13% per annum divided by every business day. So their product is actually more attractive. There's no debt. So I think SATA is also going to be very successful, and that should enable Strive to accumulate quite significant chunks of Bitcoin. So I'm quite bullish on Strive, actually. They're doing a good job. And I think Matt, who is the CEO, follows me on Twitter, so shout out to him. I think they'll do a good job. The reality is, if you are somebody who can access Bitcoin directly and you're not an institution, which prevents you from buying Bitcoin and self-custodying it, I think just going for the actual Bitcoin itself, which all of these schemes are built on top of, is the best alternative. Like, if you can have access to the asset which Michael Saylor is buying in order to create STRC and MSTR, like, why not just buy the underlying Bitcoin? They expect Bitcoin to produce 30% in annual return over the next 21 years. So why not just buy the Bitcoin and see better returns compared to STRC and SATA? For me, Bitcoin is the winning outcome. And if you are able to accumulate Bitcoin and self-custody it, having the patience, not selling and accumulating when you can, is, in my opinion, the overall best strategy. You can see hyperinflation across the world has began in Argentina, in Turkey, in Venezuela, in Myanmar, in a lot of countries across the world. Hyperinflation is a real thing. And the local people, to save themselves from their money melting away to zero, they have to buy gold. They have to invest in American or global markets. They have to invest in Bitcoin. The easiest way out is Bitcoin, because Bitcoin, unlike owning the S&P, you can actually pay for things in Bitcoin, and nobody can block you from investing in Bitcoin. Governments can take away your shares in an American stock, or they can take away your gold or your silver, but nobody can take away your Bitcoin. That's the beauty of Bitcoin. And one day, every single person in this world is going to have a little bit of Bitcoin, and I think that it will propel it to millions of dollars. So I find Bitcoin at 78, 77, 30, at 100, at 200K, still dirt cheap, and that's why I will accumulate regardless. President Trump concluded his journey in his trip in China. There wasn't any newsworthy developments, in my opinion, apart from Trump securing a soybean deal, which should be good for American farmers. That was the update. There is no taco update, which would reduce the 30-year and the 10-year and other treasuries. So I was hopeful that there would be a good update which could reduce the treasury yield, because America still needs to refinance roughly about $9 trillion by debt issuance, and that is through the sale of bonds. And if they don't reduce the treasury yields, then they're going to pay hundreds of billions of dollars extra in interest, which will bankrupt America's economy. In the short term, horrible for Bitcoin and risk on markets, but in the long term, it pushes people to buy and save in Bitcoin. So in the short term, Bitcoin could see a further drop. In the long term, it will appreciate beyond people's comprehension. Yesterday was very sadly the final day of Powell as Fed chair. I think, contrary to public belief, he's done a great job. He came into position end of 2018. Towards COVID, he brought inflation to almost 0%, but then the pandemic happened. The Fed didn't, but the Treasury printed double the money in existence, pushing inflation to 9.1%. Even though we saw historically high inflation, Fed Chair Powell was able to bring it to 3.7% in just 2 years. And pre-Iran conflict, inflation was sitting at 2.4%, on track to reaching the Fed's dual mandate of 2%. But beyond his control, inflation went up again to 3.8% now. So I think Powell did the best that he could do given his circumstances. So I just want to give a massive shout out to Powell, a huge congratulations, and wishing him the best of luck in the rest of his career. Guys, thank you so much for watching. Please do destroy the like button and share this video with a friend who needs a Bitcoin comprehensive update. Tomorrow, I will make a video on the Clarity Act, which was one of the biggest news stories of the previous week, but it deserves a video for its own. I will be publishing that tomorrow, so stay tuned on the channel. Keep the notification bell turned on, and I'll see you all in 24 hours. Bye-bye, guys.